Hey guys, I'm Dan Kraus, founder of the Stock Investor Studio, and this is game-changing stock market news of the week. My take on this week's stock market news that matters. This is episode 106 for the week commencing 26th of July. And in this week's episode, we are going to be talking about Bitcoin and cryptos, the Robinhood IPO, what happened. We're going to be talking about the Chinese crackdown on stocks like Alibaba and others. Also touch on Didi, Uber, Lucid Motors. And this week was massive for earnings. And we're going to recap the likes of Apple, Amazon, Tesla, Microsoft, Facebook, a little bit on McDonald's and Starbucks and Ford and Boeing as well, and also a few other stocks, so stay tuned. Now, if you haven't already, please subscribe to my YouTube channel using the button in the bottom of the screen to be notified of these weekly updates. And do me a favor, if you found this video helpful or interesting, please hit the like button. I'd really appreciate that. Thank you so much. Right, so kicking it off with Bitcoin staging a huge rally this week. If you don't know why, here is why. So there's still a lot of optimism around last week's B-word event, which was the Bitcoin event, where ARK Invest's Kathy Wood, she's the head portfolio manager, I believe, and founder of ARK Invest, as well as Square's CEO, Jack Dorsey. He's also the CEO of Twitter, remember that? So they were encouraging corporations to add Bitcoin to their balance sheets. Now, that would be a massive, massive move if corporations would adopt that. So one of the main other reasons for the Bitcoin surge this week was that Amazon posted a job listing for a digital and currency and blockchain product lead. Now, that led many people to speculate that Amazon would start accepting cryptocurrencies. However, Amazon then came out at the latter part of this week and said that they deny these rumors. However, Bitcoin still ending the week really, really strong, yet very, very volatile, currently trading around $39,000 a coin as we speak. Right, also causing waves this week was the China crackdown on public companies. Chinese companies continuing to sell off because their government came down hard on tech, as well as some educational companies, really causing their stock prices to plummet. Now, overall, US listed Chinese stocks suffered their biggest two-day drop since 2008. Now, where did this all start? It all started with the Ant IPO a few months ago, and since then, the Chinese government have really come down really, really hard and laid down the law on a lot of these Chinese listed stocks in the US. Now, why is China doing this? They've pointed to a few things. Firstly, financial risk, also antitrust concerns and national security violations. So it seems that stockholder pain for long-term social control is obviously very, very important to the Chinese government. So, however, we did see a bounce in US listed Chinese stocks in the latter part of this week because the Chinese government reassured that they're not looking to ban foreign listings. And the bottom line really is that as long as companies, don't pose as a national security concern, they will leave them alone. So still hugely, hugely risky. Who knows what the Chinese government might do next, but some Chinese ADRs listed here in the US like Alibaba and JD Group, I own both. I think they're trading at really, really good levels. At least that's my view. However, yes, they are very, very volatile and very risky because no one knows what the Chinese government will do next. So buy those with caution. Anyway, moving on. Stock-specific stuff. I noticed that Nike, Cisco, Target, and eBay all hitting record highs this week. So that's interesting. It was one of the most eventful weeks of the summer with earnings coming from some of the biggest companies in the world. And we're going to kick it off with Tesla. So Tesla's profits topped $1 billion for the first time in the electric car maker's history, and its sales nearly doubled, though CEO Elon Musk noted that a serious chip shortage is cutting into its output, and they've been forced to delay building its commercial truck. Right now, revenue at Tesla was up 98% year over year to $11.9 billion as the company topped 200,000 vehicle deliveries during the quarter. Also, European demand for Tesla remained really, really well above supply, resulting in growing wait times for deliveries over there. They're also going to be starting producing cars in Berlin, by the way. So overall, great news out of Tesla. I love the stock. I still own it, and I'm going to continue to own it. Speaking of Tesla, Electric vehicles, Lucid Motors, they started trading on the NASDAQ this week after the electric car group's merger with Blank Check Company was approved. I love the look of these cars. I've actually seen some displays around New York City where they actually have the physical car there. Beautiful, beautiful car. I think it's still early days for this company. Keep an eye on this one, how this one does. I have a tiny position in the stock myself. I just wonder how they'll do in the future relative to the likes of GM and Ford and other EV manufacturers who are really putting a lot of their budget towards or ramping their budgets in EV or in the electric vehicle space and really upping their targets to produce more vehicles in the EV category. So I hope Lucid can get some traction and gain some market share. Right, moving on to Google's earnings. Excellent, excellent numbers. The stock popped to an all-time high in Google. Advertising sales shot its revenue and earnings well past analysts' estimates. Ad growth was also led by retail, travel, and financial services. Overall, ad revenue increased by 70%. The real highlight from their ad revenue came from YouTube with $7 billion in quarterly revenue. Now, that's massive. Now, during the pandemic, the YouTube side of their business obviously was extremely popular. Moving on to Google's cloud business, revenue climbed about 54% to about $4.5 billion, though that is still smaller than rivals Amazon and Microsoft's cloud revenue. So overall, Google's revenue soared about 60% to $62 billion US. It's the first time that Google or Alphabet, the holding company of Google, has cracked $60 billion in quarterly sales. And I own the stock. I'm going to continue to own it. I love it. It's been a pearler of a stock in my portfolio. Great business, and I'm going to own it for still a number of years to come. Right, moving on to Apple. Apple profit nearly doubled as iPhone sales boom, but the company projects growth to slow down a little bit. This quarter was their strongest June quarter ever, with near doubling of profits and a huge revenue beat for its iPhone business. Now, the company also saw really, really strong performances from its iPad and Mac businesses amid the pandemic, as the work from home or the work from anywhere boom really boosted demand for those devices. Now, overall for Apple, revenue for the quarter rose to $81 billion. Now, that's from $59 billion. And looking forward, Apple expects very strong double-digit year-over-year revenue growth in the September quarter. Now, that's next quarter, though with a growth rate not as high as the 36% seen in the June quarter. So the stock actually drifted lower because of a little bit vague guidance. Also, these are really tough comps that are starting to worry analysts. Had a great run of light. I own this one as well, and I'm not selling it. I'm keeping it for many, many years to come. Right, on to Microsoft. Yet another record-breaking year with more than $60 billion in profit and $165 billion in sales, showing why it has become only the second $2 trillion company in the US stock market history. Now, they've got divisions like gaming and security and also LinkedIn, all surpassing $10 billion in annual revenue over the past 3 years. Now, all of Microsoft's segments produced better growth than analysts expected in the final 3 months of the company's fiscal year, which also included the likes of the new Xbox and a new version of Windows. Onto Facebook. Great numbers out of Facebook. They killed it, but it warned of slowing growth in the second half of the year, and shares really reacted quite negatively. Now, like many of the other social media companies like Snapchat and Twitter, Facebook posted a big revenue increase of about 56% year on year to $29 billion US. Now, that's higher than the high-end analyst estimates. Now, it's a robust advertising recovery story, but investors, seem a little cautious as, user numbers were only just in line with expectations. I think a lot of analysts were expecting a beat on user numbers. Moving on to Amazon, a really big beat on revenues that were 25% higher than the same period last year. Now, while that's really impressive, the percentage beat was not high enough to match analyst expectations. Now, Amazon finished the quarter with $113 billion in revenue, and that's compared to consensus estimates of $115 billion. Now, that really prompted shares to trade lower. They're about 7% or so lower today as we speak. Now, why such a big move? Because historically, Amazon usually exceeds expectations. So the revenue miss is the first time it's missed since 2018, and some big investors may seem a little concerned, hence the selling today. Now, also the CFO, his name is Brian Olsavsky, said that since the lockdown has eased, people are going out more and doing things besides shopping. On to Boeing. Now, Boeing, what a stock, posted its first profit in almost 2 years. The aircraft manufacturer saw an upswing in jet sales and its defense businesses, but needs more orders from China to continue its growth. Now, we haven't seen a positive quarter in over 2 years coming from Boeing. Earnings per share came in at 40 cents a share. The street was expecting a loss of 83 cents a share. So that's really, really good news out of Boeing. Now, there are 5 things that are driving the better earnings report. Firstly, higher deliveries of commercial airplanes. Secondly, stronger results from the Boeing defense business. Thirdly, the global services business is doing really well thanks to aircraft services. Fourth, we have cash flow that is massively helped by new aircraft order flow. And last and fifth, we have lower costs and a transformation within the company. Now, also a major announcement out of Boeing. The CEO said that they had planned to drop to 130,000 employees by the end of this year, but are now sticking with the 140,000 employees that they currently have. So great news for those working at Boeing. Right, there's a few more big ones that I need to update you on. So McDonald's, also a big beat at McDonald's. Comparable sales, store sales were surging. Starbucks also topped earnings estimates and raised its September ending earnings outlook. But they did say that rising wages and increased supply chain costs were a real growing concern. Moving on to Samsung, they posted second quarter revenues and profits which both beat analyst expectations. Profits at Samsung rose 73% year over year amid surging demand for memory chips. Let's talk about Volkswagen. Posted record first half earnings and raised its profit margin target, but lowered its forecast for 2021 deliveries, citing tough competition. Pinterest, we also saw not so good results out of Pinterest. They're down massively at the moment after losing monthly users in the last quarter. The CEO of Pinterest was saying that they're seeing an unwinding of engagement since the economy really reopened following the pandemic. And finally, on the earnings front, Ford reported a surprise profit and showed big signs of improvements in their chip supply. So really good news out of Ford. Moving on to Robinhood. They IPO'd this week under the ticker HOOD at a share price of $38 and a valuation of roughly $32 billion. Now, they sold a big chunk of its IPO stock directly to individual investors. The stock debuted, but disappointed, really. The stock was down about 8% the day that they listed. Let's see where it goes from here. The trading app company was saying that they now have 22.5 million funded accounts at the end of June. And if its Q2 revenue projections are accurate, it has already brought in more money in the first half of 2021 than in all of 2020. Now, also interesting to note that the CEO, Vlad Tenev, said that they were considering offering retirement accounts like IRAs and Roth IRAs through the platform. So keep an eye on that stock. I think investors who bought into the stock pre-IPO, obviously down now, losing a bit of money. Let's see where it goes. I wouldn't make too many rash decisions. Just be patient, think about what you want to do, what the rationale is for holding the stock. So just make wise decisions on that one. On Nikola, founder Trevor Milton was charged this week with fraud. Why? He said that they said that he had made various fraudulent claims about the company. The stock was down big time on the news. However, I personally see that they're doing a lot of good things in the hydrogen space. Keep an eye on it. It's very, very volatile, but I wonder if they will, come out of this on the front foot. I do own the stock, a very, very small position. It's been hugely volatile, so just be careful with Nikola. News out of Uber as well. Chinese company SoftBank owns a big position in Uber. They said this week that they'll be selling 1/3 of their Uber position to cover for losses in Didi. Now remember that Didi is the Chinese version of Uber in China, which, by the way, the New York Times this week reported that they were going to go private, and the stock rocketed And then it fell massively again thereafter, after the rumors they said that the rumors were untrue. Now, it's been a complete wild ride, so be careful with Didi. The stock IPO just a few weeks ago, and it's been a crazy couple of weeks. The Chinese government also came down hard on their business. And speaking of ride-hailing companies like Uber, I saw that Uber also confirmed a deal with FTD Florist, which is the trans-world delivery for nationwide flower deliveries. So really expanding their product offering of Uber. I really like that stock. Last interesting piece of news that I saw for this week is out of Twitter, announcing that they're testing a new e-commerce feature, which you'll be able to buy things on their platform without having to actually leave the app. So that's really interesting developments out of Twitter. That's it for this week. I hope you've enjoyed the game-changing stock market news of the week. Please remember to hit the like button and share this video and subscribe to get notified of my next weekly updates. Have a great weekend. We'll see you guys soon.